TGIF Warriors, how's everyone doing? Hello, Paul. Hey, Paul, I'm curious. You seem to be a very proficient trader. Curious why you come to hang out with us in face. Good morning, Brock. How are you? Alexander. Ryan, how are you? Oliver, Jeff, Ibrahim, Alexander, Michael Schneider. Okay. So that's why, just because you were shown? That's not a reason. So why do you keep coming back? Just give me an honest answer. Oh, we know the older stuff. Okay. All right. Hey, guys, Ryan, it's because we're old school. What do you think of that? So nice to come back. The interviews are fun. Yeah. So yield coming back. It's Friday. Let's see for closing higher on the week. Yeah. Nice little weekly candle. That may have been it. So that's why the yen is doing this and why it stopped where it did. Okay. And that's why the gold is under pressure to break down under this area that, well, they went for the stops. Maybe it's fake. You know, gold just, it's tough. Silver still could be building some type of flag. Yes, it's a very solitary life. And NASDAQ made a new high last night. And I just wanted to show you guys something. And I thought there was a chance for a new high in NASDAQ because of this. All right. Hi, Sinatra, Monica. How are you? All right. So you guys see this RSI reading right here? This is some of the old stuff. 75, it was right here. And then so we had a confirmed high pretty much. But then we did this. See this at the high last week before we turned. Okay, but you see where the reading was? It was 74. Now you know why I wait for under 70. Okay, so now we're making a new high in NASDAQ. And if we could get a reversal day, it's okay. Classic technical analysis that is ageless in the wisdom. How about that? Classic. Okay. So I'm going to turn you into someone who's in between classic and a millennial, because, you know, Ryan's younger than me, but who isn't? So Ryan, how you doing today? Pound giving up a little bit today, and wondering what you're thinking over there. Any action in Europe? Are you with me, Ryan? Are you still having internet issues?
I'm here. I can hear you.
Yeah, you're kind of breaking up a little bit.
Hey, Ryan, you are breaking up a little bit. Are you out at the beach already? Is it that time?
Sounds like you're snorkeling. Doesn't it, Blake?
Shut down some windows. Hang on.
Yeah. Sometimes you get that, and I'll just tell you what about where I'm at right now. And I don't know about you, Dale, but it's like end of days rain over here, which is great. I'll take it.
Oh wow! Yeah, we finally got some. Yeah, we passed us up.
Yeah. So as we're waiting for Ryan to come back in, I have to say,
how's that, folks?
Oh, there he is. Hey, Ryan. So what's going on today, Ryan?
A little bit quiet today at the moment. We're messing around in the bond market again. US yields are back up above 130 just now. They've been edging up 129s in the 10 years. Dollar's up a bit in versus the yen. We're up at 110.56 at the moment, just above some minor resistance. We sort of had intraday resistance around that 30 area, 30.35. all else being equal, it's fairly sedate this morning. Maybe the fact that it's Friday and we've had plenty of moves this week. The market's taken a little pause. Got the PMIs out in a bit from the first market PMIs for the US. Manufacturing services, we'll get a look at the US side of things there. PMIs this morning in Europe, UK, a little bit on the soft side. Germany was pretty good though. I think we've just seen a bit of moderation there from some very strong runs.
Were you surprised that we didn't see a move out of the wedge in the euro? I mean, let me just say this: I'm surprised that that we haven't broken out all week. After hearing the ECB, are you surprised we didn't get much?
Well, I bet some people went with it, Blake.
What's that?
I bet some people went with it because he had a spike above the line, and it looked like it was breaking out.
Yeah, I had a little scout buy at 1809 yesterday when it broke out. I thought, well, we might get something. But as is the case with this pair, we've got a level just above at 1830 that I had on the radar that I said in the room. Got to watch that one, and bang, slam straight into it. So I took sort of 20 odd pips on the way up on some of the position, and then stopped out at 92 on the way back down again. That's par for the course for this pair. You think you're getting a break, and you have a level 20 pips up ahead, and wallop, it's a brick wall.
Yeah, I'm thinking. I was kind of thinking going into the ECB meeting, and this is and the ECB rate decision. I was thinking that the market is pretty much positioned for a really a good opportunity to be short dollars. This is from a risk reward perspective, technically, it was a really great setup, and based on what I was reading from opinions on what people thought the ECB was going to do. I think people were just assuming that this is going to be it's dovish, or the ECB or Lagarde's going to be dovish, but just not dovish enough for market expectations. And I thought this might be technically a good risk reward to be on the long side. I think a lot of people were leaning that way, but yeah, it's a very, very messy price action. So, but let me ask you this, Ryan, based on the fact that we didn't that we didn't break out, and then obviously the inflation comments from the ECB, do you think we might get a move here as we head into the end of the week?
Yeah, possibly. I'm thinking after we've had that attempt at the top, we've obviously got the attempt at the bottom. We said that yesterday. If you try the top, it don't work, then you go back to the bottom and try it. I'm getting a bit cautious down here into this sort of 1750 that we're knocking on that door a bit too often now. I've got my level sort of 1750 down to 35. My big level is down at 1700, 1695. Or there's a fib down there. So there's a possibility that maybe not today, could come today. We do get a push out of the lower end, similar to what we got on the top side, where it might see a little push down, maybe through this 35 area, maybe down towards the low 1700s. But if it hits that 1700 level, that's where I expect it to stop and probably push up again, and then we'll see whether this 1735.50 area becomes resistance or it goes back in a box. But we've got.
It's interesting. Oh, I was going to say, it's interesting that you point that level out really quick. That 117 level, if you take the 2020 low to the 2021 high, that's basically the 38% fib. And when I look at if I'm a bull, technically of the theme that I'm trading around is like I'm a euro bull and I just want to be bullish. I really technically want to see it hold a 38% retracement. You don't want you want it to be shallow pullbacks, and really that's it. I mean, I think bulls are looking at the 117 level as very, very pivotal in the euro bullish structure. Anyway, sorry, didn't mean to interrupt you.
No, that's right, and you're 100% right. And look, we've had a test there already after we made the high. The first move pretty much was down to that fib level, right on 1700 more or less, and we've had the bounce from there. So. Yeah, I mean, I'm always wary when a price comes down, but after it's tested a level. But on a technical basis, these are the types of levels that we look for and we want to trade. And if it goes through 60, 90, the heat's on, and we're probably going to push lower. But like I say, these are the levels. They're there to be traded, and we trade them appropriately.
And maybe we have the market waiting a little bit for the FOMC next week.
Yeah, and that's the problem with this euro. It can sit in a 40, 50 pip range for days. Even if the Fed does something amazingly shocking, you still might not get 100 pips out of the euro. So that's the nature of the beast. It's that we've got a hell of a lot of low volatility around at the moment, when we just see these spikes of volatility around events. But yeah, pick your levels, and if you get something, go with it.
It's funny. We were chatting yesterday about, and by the way, if you guys have not watched this video with Brent Donnelly, the interview that I did with him, I believe on Wednesday, it's 50 minutes. He's been a senior FX trader at many banks, HSBC, Lehman, Citibank. He's been around for a long time, and his AMFX newsletter that goes around to all the banks and all the traders globally has been a mainstay for so many traders for the last 10 plus years. You guys got to watch that video. It's but Ryan, it's funny, we were watching that video, or you had watched that video, and you made some comments yesterday to me. Do you want to share what some of those were to the folks listening in? Yeah,
I mean, me and my group have been following Brent for a while. We get his analyst pieces through, trade pieces through, and he's up there with one of the best for sensible calls. You read what he does. He's not one of these guys who says, get in here with a 50 pip stop, and we're looking for 800 pip profit. He's pretty on the money. He doesn't get it all right as expected, but listen to him. I was 20 minutes in, and all I was sitting there was going, tick, that's me, tick, that's me, tick, that's me. Because his thought process, the way he goes about trades, the way he thinks, it's what all decent traders do. And I'm not saying I'm a good trader. I consider myself an average trader. But traders who all follow the same rules, the ones who last in this game, all follow the same rules. We can all have different ideas on where a market's going, but the process for entering trades, managing risk, all that process. And I've used it before. It should be robotic, and that was one of the things he said. And just to listen to that from someone as good as him, you think, this is what people should be learning.
Yeah, it's so true. It's interesting. Him and I,
be a machine.
You have to be a machine. He is very systematic with his risk management, and he's like, look, it's all numbers. We talked for a good hour or so before we even started recording. What we found out is both of us started in the 90s trading as day traders. We're both the same age. Him and I are, within a few months of each other. It's interesting also, our kids are within a few months of each other, and we both have boys. So we talked a lot over the course of an hour just before doing the video. But he is where he's very different from me from a trading perspective. Well, there's a lot of different reasons, a lot of differences between the two of us. He went into the in the investment or in the banking side of the business, and I went into the obviously retail side of the business, which that's why I ask questions about people that trade and where they start to struggle with certain amounts of money and dollar amounts. And he's like, for him, because he went into the banking side of the business and really saw a lot of big numbers early in his career, he builds everything around a systematic approach, numbers wise. And for us that maybe didn't come from the banking industry, and we didn't Stelios can jump in here, and Stelios and I have talked about this as well. just coming into the markets from different points of view, where Stelios moved. Oh, he's not here today. I'm sorry, he's not feeling well. He'd move like big amounts of money. Where for me, for retail, I'm like I was just traded with retail traders and managing around. If you're talking currencies, like less than $1 million in currency, that it's not big amounts of money that you're moving. But when you're moving, yards of currency, then it's a different ball game, right?
Yeah, exactly. I mean, I had pretty much the same experience. When I started in the city, I was on the LME, I was on the broker side of things. So you're playing with amounts of money that don't mean anything. You're putting through orders for 10 million, whatever, 15 million, and it doesn't mean anything. And it was only when I first went local on the live floor where I actually put up my own money, and I started off my account with 5,000 quid, and I put that money up. And you step at I remember my very first day stepping in the pit, and I looked at the price screen, and I did not have a clue where the price was going. Not a clue. It was as if someone had gone to sleep on Earth and woken up on Mars. It was such a stark difference between what I thought I knew before on the broking side to what I had to know now, trading my own money. And even now I come across ex-bank traders and people who've been in markets who have gone into the retail side, and it's a struggle. It's been a struggle because it's completely different. You've got to have a different mindset, different thinking. You can't use your old let's call it banking head or finance head as you did on that side for most of what you do in retail, because it's completely different. And he mentioned that, and that struck home. So we could have a 2-day webinar on this sort of stuff.
My condolences, you ended up in retail.
I want to meet you guys.
Yeah, that's true, right?
Yeah.
But here's the thing. This is I think Paul said you have to do the same thing over and over again. Journal what you do, build your confidence, improve your strategy. Works. Yes, that works. I agree with you. That's probably what I've done really well over the last 20 years. Then I started putting massive size behind what I was doing. And I don't care, if you've never experienced that, then, when you go to sleep at night and you're like, oh, I got to trust that my system works, and it doesn't matter if I lose 50 grand overnight. If I get up in the morning and I'm like, dude, I'm down 50,000, is from the time that I close my eyes to the time I wake up open my eyes. I don't care how good you think your system is. You start to lose sleep. And then that's when it really starts to affect how you make decisions moving forward. You could trust your system all day long till you're blue in the face and you're like, oh yeah, this works. That's why I laugh at all the people that put together these, what are they called? When they put together these spreadsheets where they're like, oh, you just let it compound. We're going to let your gains compound. And you start with, $3,000, and, by the time the end of the year, you're going to have $400 million if you are making 10% a day, blah blah blah. And I'm just like, dude, you're so unrealistic, and that's so ridiculous.
It is. It's crazy. Some of those things. I tell traders the act of trading should be boring. It should be boring, repetitive, second nature like reading. You look at your chart, your entry, your stop, your risk. And I very rarely pick a profit point. I don't, when I format a trade or a strategy, I don't have profit levels. I don't say I'm going to make 60 pips, 100 pips, 200.
Yeah.
All that to me is meaningless. Profit is meaningless. All I'm concerned about is doing as much as possible to alleviate the risk. Because if I can do as much of that as possible, all that's left is the upside. Then the profit should follow. And then I'm not going to get caught out. If I'm wrong, I'm prepared for it. If something happens that I've thought about, I'm prepared for it. I'm ready. But the act of trading, pushing a button, should be boring and repetitive.
Yeah. And
that's when you're doing it right, because that's not the hard part of trading. The hard part is what happens after you've pushed the button.
Yeah, you're exactly right. And just kind of always knowing your risk is obviously key. That's why, if you've listened here with me for any length of time, for let's just say 10 to 15 years, and you've been listening to this webinar or me talk, I always say, the first thing when you trade, most people, where they get things wrong is they're always thinking about the upside, but they never really think about the downside. So whenever you trade, the first thing you should be asking yourself is, what is your risk? Because once you define that, it does ease from a psychological standpoint. It does ease your idea. Like for example, if I'm like, okay, this is not a good example because this is just the SPOOs and the bullish wedge. We're probably heading to new highs today. We should close at new highs today, I would think. But let's take this is the Aussie, right? This is the Aussie, which I've been playing on the short side, like yesterday. Yesterday, I think I sold it at 73.80, closed half of it at 73.60 something, put the stop at break even for the rest, and it kind of, just stopped me out yesterday afternoon. But let's say, you're trading the Aussie dollar, and you know that your risk here is 74 cents, right? So if you sell it here at 73.80 and you're risking, let's just call it 30 pips to 74.10, that's your risk. Well, that your risk is 30 pips from current prices, and that if you get stopped out for 30 pips, you're going to lose. Let's just call it. I'll just throw a number out there. Let's say you're going to lose $2,000. All right. So already knowing that, now you know that when you trade, you're probably statistically, based on your trading strategy, how you trade, you trade, let's say, the ForexAnalytix way, and you are consistent. Where are we? 52.43% of the time over the course of 1,100 trades. Okay, you make money 52% of the time. So statistically, that a little over 50% of the time you're making money on the short side or in a trade. So your risk is 30 pips. You're going to risk a couple grand. That there's about a 50% chance that you're going to lose, whatever. Well, guess what? In your mind, it's already factored in your mind that is, you could possibly risk that money and you could possibly lose it. So it makes life a little bit easier to deal with. What really will turn you upside down as a trader and start really digging at your soul is if you take a trade, you're not even thinking about your losses, and you don't put in your stops are too wide. You're down $3,000. The thing continues to run. You don't want to accept you take a loss. Next thing you know, you're down $5,000. Then you start to get a spike up towards 74.50. Now you're down $9,000, and you're like, holy cow. And then that's what will break you as a trader. There's a lot of different break points that will do that, right? And
yeah, that's the old deer in the headlights saga. You go offside. I mean, it's like people who don't trade with stop losses. I find that crazy. Even if I want to get in a trade, I'm not sure where I want to put my stop. I'll have a disaster stop in. Something that, if I'm scalping a big figure for 20, 30, 40 pips, I don't know where I'm going to put my stop. I'll stick it in 75 pips away just so I've got something. If something happens, I don't know about, I'll have a disaster stop in play. And then 10 minutes later, I think, right, well, here's where I really want to put my stop.
It's interesting. Paul said, I don't lose sleep as I never have anything running overnight. Well, that means you don't trust your system. So, if you're like, let's say you do trust your system, then you will. Right. And also, if you're dealing in a market, like, let's say you're dealing in the FX market over the last 2 years, and you try to deal only in North American trade, and you're predominantly FX centric, you may have had weeks and months, or I say weeks or days on end with no volatility in the North American session. So what do? Do you just sit there and be unproductive? And then you're manager of whatever, if you're a PM, and then what do? Right? Then your PM's like, you got to perform or you're off, you're out.
Yeah, I get, it also depends on how you're trading.
It depends. There's a will there. You can't say all shoes or all sizes fit one. All shoe sizes fit one feet. Whatever.
Yeah, I mean, Paul is a day trader, so that's maybe acceptable. But then I'd question what you do if you're sitting in a decent position, and it's coming to the end of the day.
Yeah.
That's down to the individual. I mean, I don't like trading at certain times. If I've been watching a level all week and it's happening, in the last hour on a Friday night, I'm going to be sitting there thinking, right, I've been waiting a week for this level, but do I want to do it over a weekend? Do I want that risk? And maybe I'll trade it and maybe I'll not. The same with even short-term scalps or short-term plays. If I'm in something and it's heading into a weekend, I'll assess it, and if I'm still liking it, then I'll keep it. But it wouldn't be a trade I'd enter right at the last knock-ins of a weekend, if you know what I mean. So it's all, the thing about the Forex market is there's so many contradictions to the rules. We've all got rules, and you can find 15 contradictions to go with each one.
Of course. And I think you got to really figure out what works for you. I mean, and I'm going to go back to the trading with no stops. You have to have, in order for you to trade without stops, I think you've got to have, you've got to be trading way small amounts where, you got to put yourself in a situation where you're upside down. Like, you trade FX and there are those rare, but they seem to be rare until you do it, right? And then they come quite frequently. Those situations where you have the 200-300 pip move opposite your direction overnight while you're sleeping. If you're trying to swing trade something, you don't have stops in, and you put yourself in a situation like that, you have to factor it in, and then you can say, okay, well, even if I lost 200 pips or 300 pips in a trade, my position size is so small, it really ain't going to affect you. Well, fine, then trade without a stop if that's really how you want to go about business. But the other thing that you gotta think about too, when you're not trading with stops is, and this is where most people will fail in my experience, is 95%. Maybe I could even put that number above that level. 95% of the people don't and will not take themselves out of a trade because they don't want to be wrong. They can't accept the loss. There's so many different reasons. So, that, and they don't have the discipline. Let's just.
Yeah, that's what it's down to, discipline. As I say, the deer in the headlights, it's all well and good when you're planning it, but when something happens and you've not planned for it, that's when people panic. And that's why, as I say, the act of trading itself, it should be robotic and boring. I know what I'm going to risk. I know where I'm getting in. I know what the potential pitfalls. So I know where I'm going to be out. And if I'm out, fine. I've done my money, but I knew what I was going to lose, and I've accepted what I'm going to lose.
Yeah. Well, speaking of which, let's talk really quick just before we go, and we got into a big little. I didn't anticipate Ryan getting into a little training, and I think Steve's here probably, and he's probably like, oh, you guys just continue to talk on. Anyway, I just want to say that the equity markets look like we're going to breach new highs today. My assumption is we're trading up to the 44.40 level, the 127% extension, the top of the wedge. The market really got a lot of folks short this week, right at the beginning of the week. We had this little false breakdown. Once you got the false breakdown and you got to move back above, the 42.90, I think was the number we were looking at on Monday. That was it. That was the beginning of the end. You squeezed past this resistance right here and you knew it was over for the bears, right? So then we went from 42.90 immediately to 43.30. And that was Monday, because I'm like, we get above 42, we get above 42.90, we're going to squeeze up to 43.40. We got to the 618, and you can see we've been grinding up ever since. This is one of those situations. It's a Friday. People don't want to be short. They don't want to miss it. They want to be, they're probably going to plow on a risk. So I'm assuming we're going to trade up to new highs. You got to think about that as we're, continuing the bullish wedge. Or an ascending wedge. It's bullish until it's not. So Steve, I know you probably don't have we have like about a minute before Dale brings on his interview. You have anything you want to add here? Sorry, we went on a little bit.
We just got data, Canadian data, by the way.
Crap, is retail sales. That's right. Thanks for nothing.
Less worse than expected.
All right. I totally forgot it, and I'm not really even paying attention to retail sales right now. I could care less about the consumer. Really, it's interesting when you're dealing in the markets, what data is important, what data is not important. Right now, inflationary data is all that the market really cares about, that and, interest rate decisions. I guess the PMI is a little bit of a market mover this morning. I guess if they were outsized numbers in either direction, it would have made more of a difference. But retail sales, not a whole lot. But as Ryan said a little bit earlier, we do have some PMIs coming out of the U.S. in about an hour, I think. So, Ryan, thank you so much for being here. Steve, thanks for chiming in.
Cheers, guys.
Okay.
Yeah, and you guys
feel better, man.
Yeah, Stelios, I think he is. He was visiting some family, not COVID related, but I think he's experiencing a cold. So. Hope he feels better. Dale, thank you for all of your professional interviews all week. You're always awesome, and you guys have. Oh, one last thing I should mention. If you guys don't recall, because we're doing our merger with Forex Flow and Ryan and his crew, remember our pricing. We don't give discounts on our pricing, but maybe a couple of times a year. We hadn't had a discount on our pricing for the last 6 months since the beginning of the year. So all the, buy 1 month, get 1 month free, and the annual and semi-annual discounts are specials, and there are limited time. So if you want to join our family, jump in our chat rooms. We're actually making some tweaks to our chat rooms over the weekend, which is exciting because, we've added some features with all of our news and research and our trading rooms, our trade rooms. We're going to be adding other features, other chat rooms too. But we've also added a lot of great new data and option information flow to our platform. So we'll see you guys there.
Have a great weekend, Blake.
Yeah,
Ryan.
You too, Coach.
Thanks,
okay,
Dale.
buddy.
Thanks, everyone.
Norm. All right, and Steve, you too, bro.
You too, Dale. Have a wonderful weekend.
Thank you. All right, Norm, you're on, buddy. Waiting to hear you. If you can unmute, please. Hello, Norm. Waiting to hear you. Can you unmute, buddy? Norm?
Here we go. How about now? Okay.
Got
Now, how do we do these? Share
All right,
screen.
hey.
There we go. There, I found that. All right. Then we're going to
Okay.
go. I got to find the right thing.
Okay, let me introduce you. Okay, for guys that haven't seen Norm's work, he uses planets and nodes GAN, and he has all these great dates based upon what he does. And he started off using astrology to meet girls, and then and pick horses, and ended up at the SIBO as one of the original members of the Chicago Board of Options Exchange. And I've been talking to Norm for several years, and he offers a free course to get started with, and he could teach you things that are becoming a lost art. So welcome to FACE. Welcome back, Norm. How are you?
Thank you, Dale. Thanks for having me on your show. Just to give a quick sort of add on to what you're saying, I have about 50 years experience doing this. Been studying the markets since 1966 when I was 15 years old. And I was on the CBOE and the Chicago Board of Trade for 12 years, back during the 70s and 80s, you know. So, and I studied, I was fortunate. I stumbled on, while I was in college, stumbled on astrology. And then later I stumbled on Mr. Gann, and I learned that Mr. Gann was an astrologer. And that was the main thing he was doing. So I don't know if you have any people out there who are trying to figure out Gann, but that's it. So anyway, if you like to, you know, I don't know if you're not familiar with Mr. Gann, Mr. Gann, W.D. Gann is considered the greatest market technician of the 20th century. And he had amazing market timing. And I happen to know, I talked to somebody who worked with him for 10 years. They said that first and foremost, Mr. Gann was astrological. So let's dive right into it now. We're going to go back to a couple of weeks so we go back and review previous cycles. So all these events I have on the screen now, I copied and pasted them right out of my letter. I have a monthly letter that I've been doing for 42 years, and they're right out of my letter. So we'll go over the different points here, and then I'll show you the charts and see how the markets responded to these different astro points. So AC is after the close. The market, you know, the futures trading day is only about a fourth of the day. You know, 20, you know, roughly 4 to 6 hours versus 24 hours. So most of the things tend to occur overnight. So here we have July 7th, AAC after the close. We have the moon's north, though. That's as the moon goes around the Earth, it intersects with the highway of the planets, and that's called the ecliptic. And that point is moving in a cycle backwards through the zodiac in an 18.6-year cycle. That lined up with Uranus, where Uranus was on the 4th of July back in 1776 when the good of USA was founded. And believe it or not, and the founding fathers didn't even know about Uranus because it wasn't discovered until about 1781 by Sir William Herschel. So anyway, let's see. That all sounds pretty crazy, I know. Let's see if it works or not. So we're going to be looking at U.S. financials, which are U.S. stocks, T-bonds, and U.S. dollar. And then we're going to, you might want to take a screenshot of these. It'll be easier to follow along when I show you the charts. Okay, we got the 9th. That was a new moon, and we always look at the moons, new moon, full moon. We got a full moon coming up tonight, and so we might get a little sample of what we might expect. So we look for a major change in trend in your financials, grains, precious metals, and silver. And then the 9th, that was a weekend. The 9th was a weekend. And then also we had Jupiter, again, line up with that U.S. Uranus point. Major change in trend. You know, anything to the U.S. natal chart, that's what it's called. Take a snapshot of where the planets were at the time of the founding of the USA, and that's called the natal chart. And so anytime we have something lining up with that, then we look at U.S. stocks, T-bonds, and U.S. dollar. Then the night of the 12th, that was a Monday night, we'll be looking at anytime we have something overnight, we look at the next day's opening. So we'll be looking to trade early next day. Mars was aphelion. What's that? Well, Mars is about a 2-year cycle around the sun, and aphelion, and the planets go around the sun in elliptical fashion, egg-shaped, not in a circle. So there's a point where they're the farthest away and we're the closest. And this is from the Greek helios, is Greek for sun, and if it has an A in the front, it means afar. So if aphelion, Mars at its farthest point is 2-year cycle, we've been looking at the corn, the gold. And by the way, I forgot to mention, all these points relate to the stock market because the stock market is a big basket of everything. It tends to respond to all these points, whereas all the other markets tend to be narrow filters and only respond to certain factors. Okay, now we're going to go to the 13th, where we had a 13th afternoon. We had another point to the U.S. Again, U.S. stocks, T-bonds, U.S. dollar. And then the night, overnight of the weekend, the 16th, that was a Friday, a weekend. And then we had Mercury get to 0 north latitude. What is that? The planets go around the sun like horses on a carousel. They go round and around, and they also go up and down. And when they get to that midpoint of up and down, that's 0 latitude, and that tends to be a very powerful point, as you shall see when we look at these charts. And Mercury has to do with the grains, and of course, keep in mind everything relates to the stock market, so that could be an important point for the stocks. So there we go. Now we're going to move ahead and start looking at the charts here. Here's the corn. I had the corn for the moon and the Mercury point, and there. And Mars aphelion because it's something to do with the sun, and the sun is golden, and so is corn. That's how simple this is. It's first grade logic. So there's the moon there. You had a very nice chance, opportunity. There's your weekend there. There, the moon, new moon. And guess what? That's the low of the month for corn. So if you bought corn, you could have made some nice money.
Nice.
On the way up, there's our Mars aphelion. Did not work for the corn, so that's a miss. And here's the methodology. Notice the corn was going down, down, down. So we'll be looking for a change in trend, a low, in this case, to buy corn, and then it's going up. So we'll be looking to sell. And about 75% of the time, the market reverse on these points. Now we get over here to our Mercury point, and look at that. The nice little top there for corn on our Mercury point over the weekend of the 16th. And now we're going to move ahead. Here's soybeans. Soybeans were not as clear. So, so if you just got a little wedgie pattern here, if you drew a red trend line across the tops of those bars, and if it broke out right on the opening of the 19th, right after the moon, and then it was up and away, and there's our Mercury point. Is I think yeah, that's for July. That's back in June. So that's the high of the month for July right there on our Mercury point for soybeans. Here's wheat. It was really beautiful. Look at that. You're buying right on the low there on the moon, and there's your Mercury point. And it took a day or two to top it out, and only went a few pennies against you the next day, and then down. So those are winners. Okay, here's if we go sideways. It's Newton's law for reaction. There's an opposite reaction, and the opposite of sideways is just more sideways. So we don't play sideways. We take a pass. And there's your gold going sideways at the moon and Mars aphelion, because it has to do with the sun. And we were going to look at gold, and gold is golden like the sun. You see, that's how that works. I know it sounds silly, but I know it works. Here's silver. It's going sideways. We do nothing. Here's your S&P. We got the second half of the month here. We got a little wild and crazy. You had a guy just talking about the. We'll get to that in a minute. The low that we had over here. Anyway, we had a low there on the. I had the U.S. point there for a nice low there. Then we went up here, and I was. Let's see, that's the moon. We were a day early on the moon, and we had a U.S. point, another U.S. point there. But Mars aphelion, that was right there. That was near the. We went just a little bit, 2 handles higher on the S&P over here on the opening of the next day. You're very close to the high, which was all-time high, by the way, and one day ahead. And if you hung in there, you were well rewarded, because then it had dropped 160 handles on the S&P E-mini. That's that's $8,000 in just a few days. And then you went down here to this low. We had Mercury at 0 latitude over the weekend, and we had the big down on Monday. And I was looking for a low there on Monday, and we got it. And bad thing is I put a red arrow there because look where the opening is. If you bought there, you would have taken about 70 handles of heat. So that's not acceptable amount of risk. So despite having the right day for the low, I marked it wrong anyway because it's too much volatility. Okay, so you probably would have got stopped out, Okay, so there we go. And let's move ahead now. Here's your T-bonds. They were just about perfect. You had the high day of the right there, and then we had 2 points right there which was ahead of that low. One day ahead of that low, and then it was up and away on the T-bonds. Then we had the U.S. dollar. Here comes your currencies now. right near a nice low there, and then I have a nice pop up. Here's your Aussie dollar, mate, and there we go. You're making a top there, and then you're headed down. Here's your British pound, very jolly good, old chappy. And there we're making a top there. And there we go. We got the Canadian dollar, making a little top there, and then going down. Here's your euro. You can see it rallied into the moon and then rolled over and went down. Here's our only miss was the yen, did not play along. And here's your Swiss franc, making a nice top there and then down right on the moon. So we had for your currencies, I know your folks like the currencies, and we had 6 out of 7 currencies all dancing nicely to the moon. Okay, now here, if you add up the green arrows and the red arrows, we had 19 winners, 5 misses out of 24 total for 79.17% winners. And notice, I have no moving averages. I have no oscillators. I don't have to forecast in it 2 weeks in advance or 1 week in advance. You just wait till you get to the magic time and see what the market's doing. If it's going up, we're looking to sell. If it's going down, you're looking to buy. It's that simple. You want to simplify your life, simplify your trading. This is the way to go, in my opinion. Okay. All righty, here we go. Here's what's coming up ahead here now. Remember, all points point to the stock market plus these other markets. Over the weekend here, the 23rd weekend, we have Mercury perihelion, which is the opposite of, I talked about Mars and aphelion. This is the opposite. Mercury will be its closest point to the sun over this weekend, and we'll be looking for change in trend for corn, soybeans, and wheat because it's Mercury, and also perihelion would emphasize the corn because it has to do with the sun, and corn is golden, and so is the sun. Then we have a full moon this weekend, right on top of that Mercury point, and that makes everything even more powerful. And major change in trend. Again, we have for a moon, we have the financials, grains, precious metal, and copper, because the full moon is in the sign of Aquarius, and that's the electrical sign, and copper is the electrical conductor. And then with later in the week, next week, we have, that'll be Tuesday night, Jupiter will be, which is now retrograde. It's going backwards. It looks like it's going backwards from here on Earth due to relative motion. It'll be retrograding out of the sign of Pisces and into Aquarius. And so we'll be looking at cocoa, copper, hogs, oil, silver, soybeans, and T-bonds. And then the night of the 29th, we will have geocentric. That's from the point of view of the Earth. Mars will enter the sign of Virgo, and that's important for soybeans. So here's the 3 charts that I didn't show you on our review because they were not indicated. But here's what's coming up. So you need to look at these markets at the magic time. This weekend, you want to look at copper. All these charts were done last night, so they may not be up to date. Well, it's 8 in the morning, so not a lot has happened, I don't think. But there we go, 8:30 in the morning. And so there we go. So if copper continues to rally into the weekend, that's the potential top on Monday's opening. Here's cocoa. That's not coming up until next week. So at the time, so that was the 27th, I think. Yep. Night of the 27th, Tuesday night. If the cocoa has taken, either rallied significantly or dropped significantly, you'll be looking to buy or sell accordingly. You want to sell the strength or buy the weakness. And here's the piggies going kind of sideways or higher. Hopefully they'll get more of a trend going into Tuesday night, the 27th. And that's what I have today,
They're
Dale.
not kosher.
Right. Well, I think they're thinking of starting to trade the kosher hogs too.
To put a bunch of rabbis.
Dale, do you know what a kosher hog says?
What?
Oink vey. Okay.
All right.
I used to do that on the floor. They loved it.
All right. So here's your course, huh?
Yep. Well, I have several things. I have a swing trading letter, which is what I just showed you. I have a day trading letter to trade the S&P mini, and I also teach astrology. So I have 3 paths that you can follow. You can do any one or all of them. And here's how to get a hold of me. Here we go. We want to take a screenshot of my contact information. I'm here in sunny Naples, Florida, 239-594-3939. There's my
Yeah.
email, and Lewinsky with a Q in the middle, embark with a Q mail.com. Not a G, that's a Q. Everybody gets it mixed up. And then in Winsky_1. And let's see, I got one more thing for you, Dale. While everybody writes down my contact information. Looking forward to helping some of your folks. I mentioned we were having a full moon. Actually, tonight, I got a picture of that right here. Can you see that, Dale?
No, it have to be a new share if you want to show it.
What's that? Oh, you
Yeah.
got to go to share? Oh, okay.
Yeah, you have to
How
stop
do I-
sharing and then share again.
Oh, okay. How do I go to? All right, let me look. Okay, let's
Stop
check that
sharing.
out. Sorry, we have a little delay here. Let's see. How do we do that now? Let's see. Boom,
Up on
boom,
top, stop sharing
up
and
on
then
there.
new
Okay,
share.
new share. How about new share?
Yeah, that's it.
All right, there we go. I think I have it.
No.
There. How about that?
Yeah, there it is.
That's the
Nice.
full moon setting early this morning over the Gulf of Mexico.
Okay.
Okay.
Beautiful.
Good. Okay, cool. Huh? Got
Yeah.
a reflection on the water there. And so there we go, Dale. Okay. So do you have people ask questions or anything like that?
Any questions for Norm? It's a Q, Cedric. Have you been to India? Ronit wants to know.
Have I been to India? No, but I've been to Indiana. I grew up there.
Okay, good one. Okay, any other questions? They're saying you give DJs. Was there a gold chart? Yeah, early on. It'll be in the recording. Can you show the dates again?
Okay. I'll go back to the top of this, back to the top of my notes. There you go. Okay.
The new
that's
dates.
the old. That's the old
Yeah.
one. You want the new one?
new
Sorry
ones.
about that.
Yeah,
There we go. There we got you now.
there you go.
Okay.
When's
Just take
Halley's
us-
Comet coming back?
That's every 76 years. You know, there's an interesting story connected to that about, the story about Mark Twain.
No,
He was born on Halley's Comet and he
Oh.
died on Halley's Comet. Did you know that?
no, I didn't.
Yeah.
Boy,
And
What a connection.
I think he predicted it too, that he was going to die when Halley's Comet came back.
wow. Someone's asking, I think Paul, if you have a PDF or anything on what you teach.
Well, you can
Or
call me up
anything
and
to
talk to me. That's
explain.
even better.
Yeah, he's in Great Britain, so
What's that? Well, he can call me on
he's in the
Skype for
UK.
free. You can call
Yeah.
me on Skype for free.
Yeah, that there you go. Okay.
There you go. Here's my
Um,
contact information again.
Any idea on Saturn Uranus conjunction? I think it's on December 2021. I know you don't look out that far. You go a month at a time.
Saturn and Uranus conjunction. I
Yeah,
don't think that's going to happen this year.
they're saying D's
Somebody's
2021. Yeah,
Maybe you're talking about, maybe they're thinking of Jupiter and Saturn conjunction. That happened last December.
if copper is the electric indicator, wouldn't gold be a better connector indicator?
I don't know. I don't worry about it. I grew up,
Okay.
I grew up with the hearing about copper prices because my family is
Yeah,
in the scrap
junk.
business,
Yeah,
right? In the scrap business, Dad was talking about copper prices all the time.
yeah.
The first stock I ever bought was Anaconda Copper Mining Company when I was in college,
Yeah.
based on the planets. I did it based on the astrology. And a little book I found called Donald Bradley's Stock Market Prediction. And in there,
Oh yeah,
you
the
know
Bradley
that book?
cycle. Yeah, I
shows
know Bradley's cytograph and so forth.
Yeah, in the bag. I didn't care that much about that. But when I saw in the middle of the book, by the way, I found that book. I went to school in Terre Haute, Indiana State, and where you would not expect to find any astrology books, but they put the big interstate highway through just south of town there, and they built a big shopping center and brought in chain stores, stores based in big cities like Chicago. And I found an astrology book there and studied that for a year. And then a year later, I stumbled on Donald Bradley's book, one copy at the bottom shelf near the floor, all by itself. And
Yeah.
I picked it up and I started flipping through it. And in the middle there, it talked about the 41 business cycle. I grew up hearing about the 41 business cycle because Dr. Copper is always a good leading indicator of the economy. I went and researched that. and I decided that it was time to buy. I looked at my favorite copper mining company, which while other kids were studying football players and baseball players, I was studying copper mining companies.
Yeah.
The biggest copper mining company up until 1970 was Anaconda, but then they had
I
half
think I
their mines.
remember it. Yeah.
Half their mines were in Chile, and those
Oh.
crazy Chileans
They got nationalized them, huh?
elected a Marxist president, and
Yeah.
he decided he liked the copper mines. So then his copper and their copper mines were his copper mines, and there went half the company overnight. The company was decimated. It went from like a $65 stock down to a $10 stock. And then the copper prices were in the toilet too. So not only was the company decimated by that, they were losing money or whatever they had left. And
Yeah.
I looked at Bradley's Jupiter and Uranus cycle for my business side. I said, the copper is making a low here. I should buy Anaconda copper. So that's what I did. And within 18 months, copper went from 55 cents a pound to new all-time highs on the London Metal Exchange to $1.41. And I ended up buying, I had to wait a while because I wasn't 21 yet, and Mom would not sign for me. So I had to wait to be old enough to sign for myself. And so buy stock. And then I had to pay 17 5/8, and within 18 months or so, it had gone to over $29.
Nice. They say it's unlucky for your first big trade to work. That's
Okay.
just a floor trader's superstition.
Well, the money I made on that helped me buy a membership on the Chicago Board Options Exchange.
You have a great story, Norm. You ought to write a little bit, write a biography of your life as a trader.
Okay.
All right. And I want to thank you for coming here. And, like Blake was saying earlier, there's many ways to skin a cat. And, I believe that everything is connected, and cycles and planets and tides and everything.
Exactly. We are a part of the solar system, Dale.
Yeah.
And therefore, the human brain we are entrained to these cycles genetically for millions of years.
Yeah.
So you don't need any government news or government agency. Who cares what the Fed does? That's all lagging indicators. You want to be on top of the markets. This is the way to go.
Well, I've been called an asteroid.
I missed that. What is it?
I've been called an asteroid.
Asteroid.
Dale,
okay.
you're such an asteroid. Anyway, all right, buddy.
I had my asteroids removed.
Good for you. Norm Winsky, everybody.
Okay, well, looking forward to helping some of your folks. Everybody, have a great week.
Right, Norm. Good health to you.
Contact
good health to you, and good hunting, buddy.
Okay, thanks a lot.
All right, Shabbat Shalom, Amir is saying.
There you
go. I'll see you guys. And that's a wrap. Thank you, everyone. Don't just count the planets, the stars. Count your blessings. Hope that we've helped add value to what you're trying to accomplish as a trader. That's our goal, is to build up and edify traders every day. And I hope we're doing that for each and every one of you. And with that being said, have a great weekend, you warriors, and recharge your battery. See you next week, and we'll get them again. Adios.